Monday, February 12th, market analysis, Stan Ehrlich. Good morning, 9:40, Dow, 9:50 California time. And I seem to be getting over a bad cold COVID that I had last week. Still got this cough. I'm sorry about that. So, starting out with the March E-mini, I always start out with the stock market indexes, and we are overbought. Market got overbought on Friday, with more strength today again. Unbelievably strong market recently. I heard a statistic over the weekend, something like the last 14 out of 15 weeks, the market's closed higher on every Friday. I suppose that could be true. I didn't check it out, verify it, but it looks like it could be. That is one heck of a string of weekly closing prices. And it tells me that we're in from actually a bigger correction than I thought a couple of weeks ago. Sorry to say that. This overbought condition and the amount of strength we have seen so far is, what shall I say, over-exuberance, to coin an old phrase. So I'm still talking about a move down to 48.45 on the E-mini, and we're trading at 50, 59 at the moment. And there are a couple other spots on the way down where it might stop, but I'm thinking this would be too soon, 49.57. And this 48.50 is much more reasonable. And I can't even rule out this red zone here, which is going to be down into the 47.25 area, 47.24 or so, during the next several weeks. Next chart. And it hasn't started yet. And we may go a little higher first. Spider. Okay. Overbought now, second day. Again, it actually left a gap behind last week. So there's another reason why this market should come down to about 494, which is no big deal, 495. Support really doesn't start until a little lower, 491, and that's not much. No big deal. It really is getting pretty good at 480. That seems a lot more likely to stop the next downside correction. And 480 down into the range of 466 is the ballpark that I am expecting to see this market come down into. And I'll put another support line down right here. So between these two green dashed lines. Next is the 1 minute chart on the spider. And we see a minor, tiny little double top today. No big deal so far. And we see a minor dip coming down in the last hour. Of course, that's just so small, it really doesn't amount to anything yet. But I remind you that the biggest bear market crashes, and I'm not implying that this is going to be that at all, start like this. Very small indications, and they get bigger and bigger and bigger. This one, of course, I don't think is going to do that. Coming back down to the lows, or highs rather, on this February 7th and 8th is a small 2 days worth of support, and that would be easy. But the problem is, if it happened today, which would be really significant because that is a 5-point drop from where we are. Not impossible. We're up 2 at the moment, so net lower by 3 would not be down on the day that much. And I believe we've got some fundamental news coming out this week, CPI, CPU, whatever. It might do it. We'll find out. I'm not a fundamentalist, so I should shut up about that stuff. But we are set up for a bearish engulfing ER red sell signal if you can get below yesterday. That's Friday's lows. Doesn't look like it at the moment, that's for sure. Next chart is the DIA, Oh, and I see my scaling got screwed up. Just a moment. And here we go. Not quite overbought again, but a new high for the trend. Finally, it had a lot of trouble last week, and it did it today. So now it's trailing behind what has already happened with the Qs and the spider, and now it's happening with the DIA. So it's following suit, but it's also setting itself up for another bearish swing to the downside, and I call it a correction, a minor downside reaction correction, and a longer-term bull market. This bull market is not over. I do not believe it's over or anywhere close to being over. I think we've got a tremendous amount higher to go this year and maybe even next year as well. I'm not in the habit of forecasting long-term moves. So a correction down to 377-ish would not be a surprise whatsoever, and certainly down to maybe 370 flat next on DIA. Russell 2000 is now gapped up today. Gaps are almost always closed, so I expect it to come back down to today's lows. That would be exactly the high of Friday, and then probably a little bit more in the next couple of weeks. It may first get up to the previous highs made in December and then turn back down, and we are extremely close to being overbought again. So that would add to the likelihood of it turning down. If it rallies even a little bit more, it might get overbought. That would be 75 or higher for my custom RSI index. Again, people, I learned RSI from Wells Wilder himself in the 70s and 80s. And I know the program. Next, QQQ, overbought for 2 days. Like the spider and other indexes, in danger of turning down at any time. But RSI can be overbought for days, weeks, and even longer than weeks occasionally. Usually it's for a few days. Sometimes it's only one. So as soon as you see yellow on the way up, you should be very weary or leery about the market topping out relatively soon, whatever relatively means. And I mean within a day or two or a week or two. I don't think you should be buying here. That would be buying into a high, in my opinion. And I'm looking for sell signals, obviously. A bearish engulfing at this point would be exactly what I want. And cattle is doing it today. And orange juice did it last Thursday, and we'll see what cattle can do. But OJ is working fantastically for the third time in a row. We'll get to orange juice in a few minutes. Next chart is the the NASDAQ futures, specifically futures, March futures, overbought. Same commentary. What can I say? Looking for a correction down to 17,200 and maybe very possibly down to the red zone 16,400-ish. Now, let's go to futures markets. E-mini from a little bit different perspective. And yes, you can contact me at info@ersignals.com. Ask what you want. I'll try to reply. Sometimes I'm able to put custom symbols that people want me to look at. Hell, it could be Tesla, Facebook, Meta, whatever they call it, and the like. I'll bring up on the screen and show you the ER signals on those charts. No problem. As long as I can get the symbol to come up. I've got the data feed for it. So, no change in commentary, of course. And also for the NASDAQ, bigger picture, longer term, overbought. Looks like it should have a correction like we did back here for a couple of weeks. Looks like it could do the same thing that would happen right there after being overbought. Looks like it could do the same damn thing that we got overbought and had a correction here. And again and again and again. It's very, very normal for a bull market to have these small corrections on the way up. Next is bonds. Not much today, a little higher. Certainly not lower by a lot, which would probably prevent the stock market indexes from going up as much as they are at the moment, which I remind you is not really a heck of a lot. Up 2 points in the spider is nice, but not a tremendous amount. The DIA up 2.25, same comment, and the Qs are actually a little on the small side, a little less than 2 higher, but they're not a lot. That could disappear and they could turn red, meaning lower on the day in a very short period of time. At less than an hour. All right, so bonds. Steady, few ticks higher. Support areas trying to hold it. I think it's going to probably dip into the red zone here and very possibly drop a little bit below it, but I don't know. I think this market not being very close to oversold at all, pretty neutral at 40, might get a little under the red zone and then turn back up. I'm looking for longer term buy signals in bonds, and there's probably elbow room for a little bit lower. Same commentary for 10-year notes. They did make a new low by a minor amount on Friday. Today they're going sideways up a little bit, and now the notes are a little bit under what used to be support, and it bounced off of it here twice. But here it tried to bounce off of it for a day or two, and then Friday support starts to break down, and we're starting to see new lows for a couple of months, and I think it's going to dribble on down a little bit more, not too fast, not too much, and then we're going to hope a buy signal and on the way up again. Next, crude, sideways between a rock and a hard spot, might hit the red zone up above, and I do think it's going to hit the red zone below support, but the longer term trend being down, I favor the support level being tested and possibly broken, which would make it very bearish on a longer term basis for crude oil. Boy, I'd like that. I think a lot of people would. Most of us drive cars. Natural gas, new lows, new low close, but oversold. So a little rally because of the oversold condition could happen at any moment. No buy signals, no sign of it yet, but I'm watching for a minor short-term buy. There is so much resistance way up here, you got to get way up here, that I think any kind of a really good rally would not sustain itself. Definitely intermediate to longer term bearish. Short term, looking for a little rally. Heating oil, almost the exact opposite. Overbought in a resistance area. This is a prime combination for a dip down. I'm sure I said the same kind of thing on Thursday and or Friday. We're dipping a little bit today. No bearish signal. Too bad. Might have one still in the next few days. But the little bit of a dip, or maybe even larger than a little, may have started. If this rally high is all we get, and in a week or two from now, we're down to here, 26,316-ish, and it keeps on slipping, this could end up being a really big long-term turning point. I can't tell that now. It just happens to be about the right level and condition to maybe end up being that kind of thing. Next, gold. Well, I was looking at a head and shoulder before. That got ruined, so I've erased all the markings for that. Now we're digging into support slowly. Looks like we might break some new low ground here for a month and a half very soon this week, and then challenge the bottom of the support level. I have to point out that the high we had with the bearish engulfing air sell signal on December 4th was right up against a previous overbought condition and a very significant longer-term high in May of 23, until it finally bottomed out, of course, with a bullish engulfing buy signal on October 6th of 23. So that was a great overbought top, not a sell signal for my ER trading system, but at least a warning that it was about to turn down, and I didn't know it was going to be that big a deal at the time. So short-term neutral to bearish, intermediate to longer-term bearish. Next, silver, same kind of comment. Against resistance, having trouble holding today's rally. Probably going to go sideways to lower right away to this week. And I wouldn't be surprised if it was going to break below 21, 22 flat and come all the way down to the lows that it has created since March, almost a year ago, and October of last year. I think it's going to get down there, 21.2. Platinum. I have to say the same thing. All three precious metals seem like they're in the same boat. Intermediate to longer term bearish, short term usually neutral to at least a little bit bearish. Same thing for platinum. How about copper? Support is holding and it's oversold, so maybe a little bit more rally. Copper's not quite, because it's a metal, it's similar in some respects, but not precious metal, so it's not really the same. Yeah, we're between either the rock or hard spot at the moment, and that's the hard spot of the rock up there, whatever. And I would not be surprised to see it come back up to 3.9 again. Why not? Next, soybeans. Sideways for about a week. Trend is down, not oversold, very neutral. I'm thinking it's going to make new lows this week for the whole trend. Keep on coming down and challenge the lows that are made at 10.95 way back in May of last year. And that was a very profound, very profound low, because it also matches with the low that was made back in July of 22. So that's a multi-year previous two lows. Major support, 1090-ish. Bean oil tested resistance on the rally, stopped on Friday, lower close. Today following through to the downside a little bit more. I think we're going to see lows lower than 44.5 this week. And then we're going to challenge that profound low back in May of last year at 40.83. Excuse me, and make new lows. Next, meal. Well, it's already getting very close to doing the same commentary type thing. Previous lows, and we got three of them, about the same price levels, going back to about May of last year. We've approached very close last week. Now, today is up, but we came close to oversold, not quite. So I'm not surprised, but I don't think this rally is going to carry very far or for very long. And I hope I get a new sell signal soon. Short term, kind of neutral to maybe a little friendly, but that's stretching it. Intermediate, longer term, bearish, bearish, bearish. Next, corn. Well, it's done the same thing I'm saying again and again and again and again for months. Probably into the fall of last year, more likely than not, late summer, fall. New lows, periodically oversold. Reason for a minor periodic bounce. That's all you get. That's all we got. That's all we've had. And I think that's all we're going to end up getting in the next week or two. Oversold, could bounce a little bit. That's too close. 435, possibly 453. Next, wheat. Same thing, but there is a little bit different story developing in wheat. Sorry. We made its lowest low in an oversold condition in November 27th. It wasn't a lower low by very much, just a very small amount, and it turned around. Then it made a new high for a couple, 3 months. Since then, we have no new highs and no new lows, and that's been 2.5 months since that last high of some significance, not that big a deal, 650. Are we building a longer term bottom that started to actually build September 29th of last fall? Maybe. What do I have to see? What do I have to have in order to be much more convinced about that? Well, one thing would be dropping down to test these lows and not make a new low and turn back up again. And or just more stability and starting to make new highs again without the test of lows and starting to break above 650. That's going to raise some major eyebrows. That would be a new high since September, October, November, January, February, and let's call it also next month, March. That's 6 months, a half a year. But it hasn't happened yet. So momentarily, I got to go back to sleep. It's snoringly boring, neutral, but there's something brewing. Cattle. Yay, we got a brand new sell signal today. Now, the high, like Friday and Thursday, was smack dab against the resistance level. Today's high is precisely 187.57.5. The high on Friday was 187.475. Today's high is higher than Friday's high. Today's low is obviously visually lower than Friday's low. We were overbought for a while. In fact, mostly overbought for damn near a month. 3 weeks. Quite a while. Overbought, up against resistance. Resistance stopping it 3 days in a row at almost the exact same prices. And now a bearish engulfing. This looks great. Plus, a few days ago, I got a bearish engulfing that did not work. And I've mentioned many times that the indicator, the ER signals for tops and bottoms, does not necessarily pick the exact highest high or lowest low for a trend up or down. It oftentimes does, and that's why I developed it. But that's not an easy trick to come, to do in the first place. But sometimes I get red or bearish signals in green, bullish, in the process of topping out. And hopefully, excuse me, this signal is going to be the signal. There's a lot going for it. So we're short ER1 scalp, and we'll get out before the close, and ER1 overnight and try to milk a longer term trade out of it. And in the next 3 days, if we hit the red dots, we may end up being short for the ER3 trade. Wouldn't take much to rebound into around the middle of the range of today, whatever it ends up being. Remember, it's not closed yet. It could make new lows, changing the middle of the range number. Okay, hogs. I'm looking at rock and a hard spot. We just tested the resistance above the market in overbought conditions, a favorite combination. Turned down very, very nicely, bounced one day on Friday. And today is down a little bit. On short term, maybe a little neutral to a little bit bearish. Intermediate to longer term, Tierra del Fuego heading south. I'm looking for lower levels. So bearish, probably a test of 73.20-ish. We're going to go to OJ. I can't believe what I'm looking at. We caught a bearish engulfing at the time, October 31st of 23, the historic highs in OJ, and it crashed for 3 days, 4 days. Got oversold at support. Turned around and made a run into total new historic highs and had another bearish engulfing ER sell signal, which is still the historic high in orange juice. And that was on November 21st, and it had a huge move down until a buy signal, almost the exact bottom, on January 11th. Now we have had a rally causing overbought conditions. Friday's high and close was at a resistance line, the old neckline, which normally has no effect on prices later after this pattern, which worked great and extremely accurately, finished on January 18th at almost exactly the minimum downside objective in oversold conditions, and has come up on Thursday of last week to give me a sell signal and dropped on Friday and breaking badly today. No pun about the TV show. Good show. So it left a gap behind. We're not oversold yet, nowhere near, but support could allow it to bounce up and close the gap at 373.40. No surprise, but it has to stop there and start to come right back down again if it can do it in the first place. Gaps are almost always closed, so I won't be surprised, and it should start soon because we're right at support. We'll see what happens. Is this sell signal going to cause The same thing that happened before, huge move down. The same thing that happened before, it didn't last long, but that was a very big move down. These sell signals, in all fairness, didn't work very well. Very minor 2-day down move. That one didn't work at all. That one was okay and moved down for about a week, 3 days or so. This one looks like a very good candidate for a much bigger move than we've had so far in the next few weeks and maybe months. Cocoa. I keep harping the last week about it being a blow off top because of its extremely stronger and stronger strength and hugely overbought conditions at 96. It's very rare. You'll see this maybe less than once a year. For a market to have on a daily chart an RSI, my custom RSI at 96, it doesn't happen very often. I'm going to go back, I don't know, a couple of years here. Oh, okay, to 2016 and put my cursor horizontal line at 96.37. I don't see any other reading at 96 in 5 years. 5? What's that? 6, 8 years, approximately. Look at the way this thing has moved. It is unbelievably strong, faster and faster. This tells me it's a blow off top, of which I've said a couple of days ago. And at any moment, it should start to collapse. That is not a collapse. This is just lower on the day by a little bit. It may be the beginning of something. I can't tell that. But my 53 years of experience watching commodities and stocks and forex and sectors and markets around the world, that looks very, very, very much like a blow off top. And I sure as heck expect it to drop like a rock before you can blink. Very, very soon. We'll see what happens. Coffee. I thought we had a top building. We still might. But this has gotten into new high ground for about a month now. Broken above some resistance levels, but not really staying there. Looks like it's setting itself for a bit of a dip. And if that dip does break below real soon here, 181, we could be in for a much bigger decline, starting to get down to 170 and then even lower and lower than that. This high we had back in December, wasn't too much above the high we had way back here in April. Historical resistance. And we are at that same level now. Every time the market has popped up above to where we are, it's turned down, and sometimes really big time. Next chart, sugar. Resistance seems to be stopping the rallies. First was overbought condition, turned it down, didn't go very far. We had a sell signal that worked for a couple of days, a very minor amount. Then we had minor new highs. Are we going to get another bearish engulfing sell signal? Well, maybe, but the conditions are not right at the moment. Neutral to bearish, short-term, intermediate, and long-term. Well, intermediate and longer term, a little bit more bearish. Next, cotton. Wow. Major resistance. Tops back in August, September. Stop this rally again in overbought conditions again on Friday. Today we're down some, not a lot. By the time we're down a lot, you have missed getting short. If you get short somewhere in this price range, and it does work, if it works, you're going to be pretty proud of yourself later. If it doesn't work, your stop should be somewhere, in my opinion, around where the blue line is. You won't get hurt too badly. What do you got to gain? What do you got to lose? You got a modest amount to lose, but what do you got to gain? Maybe a lot. Next, we're back to the E-mini. Still strong. Now we're up 2.22 in the spider, which is another 20 cents. And we're up DIA, now 260. We were up about 2. And the Qs are just kind of lingering around the same levels. You guys have a great day. Talk to you tomorrow. Profitable trading to you.